Good, good. So, level 3, coming soon, next month. I want to start it up. And I'm thinking that we'll be doing them probably Friday mornings. So we'll have a level 1 Monday, level 2 Wednesday, level 3 Friday morning. Probably early. Maybe earlier than the 10 a.m. that we're doing now. Would you be, show of hands if like 9 o'clock in the morning would work Friday, Eastern time? Okay, almost all of you. Yeah, because Fridays are busy days for me. Yeah, good, works for all of you. Yeah, Fridays are busy days for me because I start preparing the Aruja report on Fridays, so it'll be a busy week. Classes 3 times a week? Huh? Crazy. Mamma mia. What am I getting myself into? Yeah, lots of work. But this is what's required. The more work you do, the better and more on top you'll stay. Yeah, so the Sherlock sessions, what I'm going to be doing with them, I'm going to keep them going because we have students in level 1, level 2 that are really proficient at locating zones and checking trend lines and so forth. So what the Sherlock sessions are going to be all about are they're going to be sessions where we concentrate our focus on examining the charts, making sure trends, trend lines, zones are all correct. Because as you've seen in the past, if you have a zone incorrect, it's going to provide the wrong information. And we have really good students in level 1 right now that are really good at locating zones. So that's going to be a discussion group where we have very qualified analysts in with us together, and it's going to be like an open forum. Everybody's able to speak, everybody's able to talk at the same time. We'll all be looking at the same chart and we'll be examining. So just like when I gave out some work with a Euro Aussie to check out the daily chart, we'll be doing things like that. So if I see that there's a potential opportunity to take a trade on a specific chart, and I want to just double check all the zones and the trend lines to make sure that they're high quality or that they even are valid to begin with, then I'll offer out that homework to have multiple eyes checking the chart all at the same time. Then we get together in a Sherlock session and we examine that chart together. Everybody brings their analysis to the table and to ensure that the analysis is correct. And then in level 3, we'll be examining those charts on the multiple time frames and be setting up trading opportunities or discussing trading opportunities. And then when we're actually in a trade, we will be talking about how we manage that trade. How do we know what size position we want to open? How do we know where we want to add? When do we move our stop losses? Why do we move our stop losses? So it's going to be good stuff. I'm really looking forward to it because you've seen the power of doing these classroom sessions every single week where we are examining the trends, the zones over and over and over and over again. And you're starting to see the difference of how your mind is spotting the zones. You just will automatically know where to draw the zones, how to draw the zones. So level 3, we get more into the dynamics of the market, how the market moves, why it moves the way it does, how it reacts from different zones on different time frames, what we need to watch for entries. So when you know the market dynamics in a high probability situation, then you'll when you're in a trade, you'll understand why you'll be entering in a trade when a zone breaks or when a zone gets validated and it drops back down to that zone. or when an opposing area is taken out, how you can adjust your stop loss, why you would adjust your stop loss. And it's all based on market dynamics. Because if you have this idea, so just getting into this a little bit, let me show you something here. Okay. So if you have an idea where price is coming down into a zone on a certain time frame, and your overall analysis is saying that after price comes into this area of demand, that what is going to take place is a move up to a supply zone up here. What you'll find is that on lower time frames, there will be those obstacles, right? Those supply zones. So if you understand ranging, then you know that that's going to be a barrier for price until it breaks through, right? It's going to act as a barrier. So all these elements that we're learning in level 2 about ranging and when price breaks out of ranges. So if you know that this is the zone keeping price in a range, all right, then does it not make sense to have an order to add to a long position if you started to accumulate a long position down here? Would it not make sense to have an order to add to that long position on the break of that zone? And then the demand zone that was responsible for removing this zone, to have another order to go in long at that demand zone with a stop loss below that demand zone. And then all the stop losses that you had down here on the initial entries, wouldn't it make sense that you move it underneath this demand zone that was responsible for breaking this key zone, which was the only zone that was keeping price in the range? So you see how the dynamics, how it plays out, and what we're learning here in level 2 about ranging and how price stays in a range, but then when it breaks out of that range, you know that it's going to continue with the bigger move. So you see how it all comes together when planning trades, moving stop losses. You're not just moving stop losses. So you see the ridiculousness of how, there's so many systems that are like, oh, trailing stop loss. Oh, that's wonderful. Okay, so you get into a trade and you're going to trail your stop loss 10 pips or 50 pips, or you see how that's just bizarre thinking. You can't do that. How do you know price is not going to come back? And then the price hits a supply, drops, hits your 20 or your 20 pip trailing stop loss, gets you out, and then price continues to the upside. I mean, where's the reason for it? There is no reason for that. It makes no sense. There's no logic behind something like that. When you manage a trade, an open trade, based on the logic of how the markets work, you'd be incredibly surprised just to see how well your stop losses hold and how price moves along. So you see how this completely makes sense. Price breaks out of the range, comes down, you add to your long position, stop losses here, and all your other stop losses that you had down here, you move up here. You get the risk off of all these initial entries, and you put the risk on this trade, which can now be a larger size trade, because let's say you are only looking to risk 2% at any point on this trade, okay? And you know that the distance between here and up here is quite large, and you can capture a good amount of profits from that move up. If you only wanted to risk 2%, and you had a good chance of reaching 5 to 10% on this trade, then you get in down here on these lower positions here, you get in with a combined risk of 2%. Once the key zone breaks through, and you know that the demand zone that was responsible for breaking that key zone is located higher than your entry points, then you know you can adjust your stop losses on all these trades down here to above here. So if you adjust your stop losses to above here, okay, right here, I'm going to put it in red. If you adjusted all the stop losses to above here, let's say if your stop loss was to be hit, you'd make 1%. If your outlook on this trade is, you know, if you've specified in this trade that you're not willing to lose more than 2% on it, if the stop loss was hit on these initial trades, it would give you 1%. How many percent would you be able to risk on this zone that broke the key zone here that was keeping price on a range? How much would you be willing to? How much could you? Any answers? Let me unmute your mics.
There you go.
Good morning, everybody.
Good morning.
So, how much? No,
1%.
Joey, not 1%. No. If the overall, if you said you weren't willing to lose more than 2% on this trade, okay? And let's say you opened up 3 trades down here, okay? And the combined risk on those 3 trades didn't go over 2%. When price breaks through this ranging zone here and produces a demand zone, and you move the stop losses on these 3 trades up to here, below that zone that broke the key zone, and you calculate that if those 3 stop losses get hit, you will have a combined profit of 1%. This additional trade that you're opening up here, remember there's a zone that breaks the key zone. You put an entry there, stop loss there. How much could you risk there on that one trade alone?
Another 2%, because you don't risking anything at the moment, even if it's stop loss got take, right?
You could risk 3%.
Okay.
Because if you lost 3% and you gained 1%, you'd equal to 2%.
Right. Makes sense.
Make sense?
Yeah.
If you're willing to risk 2% on this trade idea, your initial 3 positions that you get in, you're risking 2%. Once the key zone breaks, that produces a new key zone. You move your stop losses on those 3 initial entries, and if those stop losses got hit, that would mean you would make 1% profit. You'd be okay to risk 2%, or sorry, 3% on this trade here, because if you lost 3% on that one trade, you'd be gaining 1% on the initial entries. Therefore, it would be a loss of 2%. You understand now?
Yeah.
You still make a loss of the initial, what you were planning to risk in the first
What
place,
you're
right?
willing to lose, exactly.
Yeah.
But what you'd be gaining is, look at, I'm going to draw it in a different color. Let's put green. If you had a key zone here in green, and you had an entry above it to go long, and a stop loss below it, okay, and you're risking 3%, how much would that one position make you by the time it got up to here?
8%?
Well, this is just, let's do this. This is just speculation, but I'm just giving you an idea of the power of what we're doing here. Okay, so if you were risking 3% on that trade, you could make, let's go with blue. You could make 3, 6, 9, 12, 15, 18, 21% on one trade. So never risking more than 2%. You're aiming for one position to make 21%. You guys see how that works?
Mm-hmm.
Yes, sir.
Now, would you just keep your stop loss that high? It all depends on the chart. It all depends on the obstacles that you're going to have to come across. If there's obstacles that might push the force down too much, that might make that demand zone that you're getting in long test for a second time, maybe you don't feel comfortable keeping your target up there. In a trade like that, maybe you want to take off 1/3 of your position 2 to 1 away so that you bulletproof the position and it becomes risk-free. And then now that 3% that you were risking becomes 0%. So that trade becomes 0%. That's not bad. And so instead of aiming for 21%, you'd probably get maybe 13 or 14 or 15%. But it's risk-free once it moves 2 to 1 to the upside.
Yeah.
So you guys starting to see that, or are you still not getting it?
Yeah, that makes sense.
Yeah.
Makes sense.
Yeah. Okay. So that's the power of understanding market dynamics, understanding the trends, understanding when price is in a range, what happens when it breaks out of a range. That's why we're doing what we're doing, so that when it comes time to plan a trade, you're not all lost thinking to yourself, where do I put my stop loss? When do I add to my trade? Why am I adding to my trade? Why should I add to my trade at that demand zone? Because the more a trade unfolds, because there's this idea, right? It's like watching a movie. You know, when you sit down to watch a romantic comedy or a movie that you're not told if it's a horror movie or a romantic comedy or a sci-fi adventure, you're just told, here's a movie, sit down, you got to figure out what it is. So you sit down, the first 15 minutes you're watching it and you're like, okay, the music in the background's quite lovey-dovey, they're singing about love and about this and that. So it doesn't sound like, this is going to be a horror movie. And then you watch it a little bit more, and then there's this guy, and, he's at work, and he's talking about how he's got to meet this girl. And so you're like, oh, this is sounding like a romantic comedy. So as the movie progresses, it starts to show you that your idea of it being a romantic comedy is valid, is strong. And the more it plays out, the more you start to see all the elements come into play. So, just like in these classroom sessions, when you see what happens when price is in the range, and then price breaks out of that range, it creates a key zone, and then what happens, right? So let me just ask you guys, when price is in a trend to the upside, and then price hits a higher time frame force that pushes price to the downside, what normally happens with that trend to the upside?
Like stop broken.
Sorry?
It stops. It's broken. Like
Consolidation, Kev.
yeah, range until it turns.
So the trend breaks, right?
Yeah.
Yeah.
And when it breaks, what does it usually create? An uptrend.
And
When it breaks, what does it usually create?
Supply.
A supply
yeah.
zone, right?
Yeah.
Okay, so then it breaks that supply zone. If the bigger time frame forces were pushing price to the upside, once that supply breaks, what do we typically see happen when it wants to continue back to the upside?
Momentum shift on the demand zone.
What I'm looking for here is what tends to happen is that supply zone that broke the uptrend, when it gets removed, creates a key zone, and then that key zone is used to propel price back up to the upside, correct?
Yes,
Yeah.
correct.
Yeah.
So if you know this to be true and you've seen it 1,000 times and you're in a trade and the same exact thing is happening, you're taking a long position off of a 3-month demand zone that's in play, and price rallies up and hits a monthly supply zone, and you're going long on every weekly demand zone while weekly is in an uptrend, monthly supply zone gets hit. Would you add to another position on a weekly demand zone?
Yeah.
No. No.
No.
No.
Maybe not, because a higher time frame force is pushing down, right?
Yeah.
Monthly force, yeah. Wait.
So would you be moving your stop losses above that weekly demand zone if you know with high certainty that it'll likely get taken out?
No.
No.
No. So what you do is you'd wait for that demand zone to be removed, creating a weekly supply zone. And then let's say price breaks through, creates a weekly supply, price continues going higher, takes out that weekly supply and creates a weekly demand. How happy will you be to move all your stop losses above that new weekly key zone, demand zone, and put orders above that weekly demand zone to add to your long position? How happy would you be to do that?
Very.
happy.
Very happy. Why? Because you've seen it 1,000 times. That's why. Not because, you're reaching a fib level or because an ABCD pattern suggests that it's a good idea to buy. Not because of that, but because of the reality of how the market works. So the more you see it, the more you build confidence. So you understand how this is how you build confidence in trading. When you know something to be true, you're more likely to be confident doing it than if you don't know something to be true. So when it comes time to pull the trigger and add to position, trust me, it's hard. When you're in a position and it's profitable and you want to add to those positions, but you know that if those second positions or third positions that you're adding, if it goes against you, you'll take a loss and the profits that you've already accumulated from your initial entries will dwindle. When you know that to be true, that's tough to take. That's a tough pill to swallow because your instinct will be, I don't want to lose money. Your instinct will tell you, I don't want to lose money. I worked so hard to do the analysis. I worked so hard to get into this position. I was right when price came into my demand zone and then it reversed and head up. I'm in the profit right now. Now I want to build this position so I can continue to reap the benefits of my analysis. It's tough to add to your position because when you see that position go against you and you start to see your nice profits start to go less and less and less, your mind is going to start playing tricks on you and you're going to start saying, maybe I should get out, maybe do this, maybe that. But if you know certain things to be true, you'll know where to get out, where to put your stop losses, because if there's a very specific demand zone that if it gets taken out, changes the dynamic of the chart, you put your stop losses below there. If you're 90% or 80% or 70% confident that you know what dynamic is in play, when you put your stop losses there, you're good to go. And if you've done the analysis correct and you have a good understanding of the market dynamic, then it's going to work out. The trade is going to work out, period. And if it doesn't, guess what? Your stop losses get hit at that key zone that if it got removed, the dynamic will change. At least you know you got out at the very exact place you should have gotten out.
Yeah.
Not like, your typical trader who they do their analysis. They want to be right so badly, not because, the analysis is correct. It's because of their ego. And they think that they're smarter than everybody, and they think that they're smarter than the market, and they think that their analysis is better because they read some books and they spent some time sitting in front of their desk and drawing lines and stuff, and they let it get to them. So when they get into a position and it starts to go against them, they don't even know. First of all, they don't even know where the stop loss should be, and they don't know when to call it quits, and they don't want to take a loss. So they'll just keep on adding to the position. And then they think, oh, if I add a bigger position, when it goes in my favor, it'll make up for the losses of the initial positions. I mean, this is just retarded work. This is just crazy. People that think this way, and I've seen so much of it. Like I said, a couple years ago, more than that, I used to subscribe to trading signals, have other traders manage my account on my behalf. And I saw exactly what they did. And it was just crazy. Totally crazy. So anyways, so you see how this is all coming together?
Yeah.
You see how this all is coming together, and it'll build up your confidence to take a trade, and you won't take it personal because the dynamic of a chart can change. It can. You know, there's a lot of factors, but when the markets are trending and really nice forces are in play and everything is going in one direction, the market is extremely predictable, extremely predictable. But when you have ranging and when you have consolidation, forget about it. Stay clear of the market because it's not highly predictable. You know, there's certain cycles that we can locate and try to get into a trade while that cycle is playing out. But you know, you'll know when it's high risk and when it's not. But when everything is trending and so forth, man, it's extremely predictable. And those are the best times to trade. All right, so let's take a look here. So that's what we'll be doing in level 3. We'll be looking at the markets together. We'll be examining the multiple time frames, and we'll be locating the high probability trades or the lack of trading opportunities, and we'll know when to stay out of the markets. All right, so you guys worked on the monthly chart. Let me see. Anybody want, Joey, you have a question?
No, sir. I just left it up.
Oh, okay. Anybody want me to take a look at their chart first? Just put up your hand. We'll have a look at it. So I wrote this in the last observation journal. Do you guys remember when I took a long trade off of a daily demand zone when price was in this zone here?
Yeah.
Okay. So Sherlock said, with price hitting this monthly demand zone, there should be a momentum shift off of this area and price should continue upwards. Why? Well, because this is how the market works. This is what was to be expected, that this monthly demand zone would hold and momentum would shift to the upside. Well, then we had, you know, interest rates being slashed and then big spike to the downside, okay, out of the normal. And then lo and behold, look where price closes and opens again.
Yeah.
Okay. So do you see how this all comes together? How we've been examining emotional candles. What do we know to be true about emotional candles? Emotional candles is when there's massive volatility caused by some economic news that causes major trading in one direction, only for it to reverse back by the institutions to bring it back into the zone that price was going to respond to before the event took place.
Hmm.
And then with properly formed candles, the market will continue to move in the direction that it was going to move in before the event took place.
Which makes it unimportant, right?
Which makes it as if it never even existed.
Yeah.
So it's like this.
I agree. I agree.
Okay?
Hmm.
That's it.
Hey, Kevin,
So
that must have been frustrating for you to figure this out when you're doing this work and you had all these big wicks going through zones. Must have been, yeah.
very frustrating. Yeah. Because, you know, a previous mentor of mine, the way that they were drawing the trend lines, they were incorporating these long wicks into the trend lines. And if these long wicks traveled through zones, then they would remove the zones. And I said to myself, this doesn't make any sense. This doesn't make any sense. This goes against the logic of how the markets move and why it moves the way it does. It goes against the logic. When something goes against logic, I mean, first of all, you have to understand what logic is. If you're not focusing on, you know, trying to figure something else out based on logic, then you're not going to know what to compare it to when you're trying to discover something new. So looking at these big wicks traveling through zones, I just took it upon myself and I said, no, this goes against the logic. You know, this big move was not the institutions. I'm tracking these big moves, these big spikes, and it wasn't the institutions. This is a news event. Well, what do we know about news events? What are they used for? To manipulate price, to cause retail traders to do one thing so that the institutions come in and push it back in the opposite direction and then continue on with nicely proportional candlesticks. So I thought about it and I was like, this doesn't make logical sense. The zone should not be removed with a spike. So I started to adjust my analysis and do my own analysis, you know, because I felt like what I had learned from OTA was pretty decent, okay? But like I said, compared to what I know now, what OTA taught me was like 5% of what I know today, okay? 5%, definitely 5%. What I learned after that with my other mentor was probably 15% of what I know today, okay?
Hmm.
Everything else I figured out on my own. How to do the trend lines properly, how to do the, and I shouldn't say I figured it out on my own. Let me correct that. The market told me how to do it. Just like the market, and I'm teaching you guys how to let the market teach you. So, but you have to apply logic. The only way you apply logic is to study the markets long enough so that you see what the market is telling you. The market is telling you. You just have to learn the lesson. And then when you apply what you know to be true to charts that have a lot of things that you don't know, apply what you know to be true, and the information will be revealed to you. So this is a perfect example of, you know, um, the emotional candle spiking through a zone. And then what happens? How does price close? Right smack dab inside that zone. Am I surprised? No, I'm not surprised. Why? Because I've seen it 1,000 times. That's why I'm not surprised. It's the same thing over and over again. It's just if you don't know where to look for it, forget about it. You have no chance to ever see it, you know? So think about it. Like, what did you guys think about spikes before you came to this school? What did you think about spikes? What do they mean to you?
Reversal.
Sorry?
Reversals. Rejection.
I was always told by the guy I learned off that spikes were from the institutions to take out retail traders.
Yeah, I heard that one too.
So that's
Stop
when
loss.
that's when
Stop
the
loss hunt.
people were.
Up
Yeah,
on.
so you hear all these terms, stop loss hunts,
Yeah.
to take out retail traders. The bottom line is there was an event here. This one was, you know, contracts closing. Nobody wanted to keep the contracts because nobody wanted to take shipment of oil because there was no storage. I mean, that's what is said. Whether that's the real truth, I don't know. I don't know. What I do know is that here is where they were going short. Here is where market dynamics suggested that there was going to be reversal to the downside, right? That's what I do know. So whether or not, you know, it was because of contracts expiring and nobody wanted to take shipment of oil, who knows? I don't know. Maybe it was a big scam to lower the price of oil, to screw up Trump, screw up the economy. Who knows? There could be so many different reasons. I don't know. I don't have the answers for everything, but that's what I do know more than anything in the world is about emotional candles. Okay?
Yeah.
That's what I do know more than anything in the world. I know more about emotional candles than anything else because this is what my study is all about. This is what I study. So anyways, so let's get to work. We are starting late. You guys cool with this discussion that we've had?
Sure.
Yeah.
Yeah, guy.
Good. And I'll show you an example. Okay. We have this Aussie chart. Let me show you the monthly. Okay. So the monthly chart on the Aussie is down. The monthly trend is down. Why? Because you have a descending trend line, demand was removed, and supply was created here. So it's in a downtrend. But on the weekly, if I open this up, we had switch zones here. This one, and arguably this one, but I think it's good. The big push up from massive demand caused price to come right back into it, so it didn't provide the consolidation away from this area that we would want, but under the circumstances of what price was reacting to, this could very likely be demand. So this one is questionable in my mind, this demand zone here, very questionable. So I'm letting this chart tell me whether this downtrend on the weekly chart is broken, because up until this point, we had a descending trend line coming down this way, and this was the supply zone, the latest area of supply that was created when price pushed all the way down. So what I'm trying to learn from here is, if this area here was a switch zone and it got removed, then technically right at this point when price came back up, where I'm drawing this line right here, this would have broke the downtrend. Okay,
Yes.
right?
Yeah.
Because we would have expected this to hold and push price lower in a downtrend.
Mhm.
But we know we know that the reason why there's more force to the upside is because higher time frame demand is in play. So what I'm watching for is to see the reaction here from this supply, because this will be another one of the scenarios in the markets that I'm going to learn from to add to my knowledge base of whether or not removing a switch zone would cause the trend to break or not. So depending on how price acts from this reaction from this supply up here, I'll have another market situation to add to my database of knowing whether or not this switch zone being removed didn't break the trend line. And if this switch zone being removed didn't break the downtrend, I should say, I have to come to discover why this switch zone being removed doesn't break the trend, but on other circumstances it does. I believe it does. I believe taking out a switch zone does, because what I've come to learn about switch zones is, let me go to a blank portion of the chart, is this. If you have a supply like this and price comes down, consolidates, drops into demand like this, okay, what happens a lot is price will come up. Nope, let me change that. Let's pretend I never drew that part. Price will come up, create an ascending trend, an ascending trend line, take out this supply, come up, come back down to this exact area, and then continue higher. This happens a lot. And the reason why, and there could be a demand zone down here, right, that was responsible for breaking that supply, but price doesn't come down all the way to that demand zone. It stops at that switch zone and then continues higher. So the logic is, if the institutions constantly create chart scenarios like this, where they create an uptrend as price is responding from higher time frame area of demand, they break through supply, and instead of reversing price all the way down to the demand zone that was responsible for breaking through that supply, they reverse price down to the switch zone, and then they continue price higher. So if they're using that switch zone to facilitate the move the trend that was already created down in this area, then would it not make sense that if price came down and removed this area, that trend would be broken?
Mm-hmm.
Right?
Yeah.
Okay. So applying that concept to here, this trend has to be broken. I give more credence to this one than I do the one down here. I think that one is the stronger one. Price came, stair stepper, right through. Here's the demand zone. So now I'm watching to see, because right now weekly is in a range. It broke the trend, likely here on this lower zone, went to consolidation, hit opposing supply, and now we could have this. So I'm watching for this. And if something else plays out, if this just drops like this, what do you think I'm going to be thinking?
The trend wasn't broken. Switch zones and yeah, the switch zones can be used for breaking trends.
Yeah. Yeah. That's what I'll be thinking. If price just drops like that, then I'll be thinking to myself that there was probably a strong downtrend still here,
Mm-hmm.
and I have to rethink what's going on here with switch zones. Because maybe, and I'm not at that level yet, but remember how I told you, the more you learn about something, the more you start to understand that you don't know very much.
Mm-hmm.
The more you learn, the more you realize you have to learn. There's more to learn. So this gets into the intricacies of that, you know. So we learn about switch zones. Okay, they're great. We know certain things about them. What we know to be true, we apply to other charts. We know that we can use them to locate other zones. We know that we want to see strong moves dropping through them. We know that they typically happen when price breaks out of a range. We know that they happen when price responds from higher time frame areas of demand and supply. So all these things we know to be true, and we can apply those things to scenarios when we're doing our analysis. So
maybe bottom line though is that, you know, the supply and demand zones take precedence over these switch zones, I think.
the supply and demand zones that are created by the institutions, when they remove actual supply, not switch zones, they take more precedence over everything else. That's definitely. But how much so, and what scenarios, when they're responding from different zones, does it make a difference? All these other little factors now come into play. So do you understand why I want to create this database? The importance of creating this database? Because these will be the data points that I'll be putting into the database saying, okay, it took out a switch zone. And what ended up playing out was the typical formation that would play out on the lower time frames if the weekly was in a downtrend. So if I establish that over a long period of time that price played out as if that switch zone wasn't even there, then I have to figure out why. So my expectation is that this has been taken out because price would have dropped like this if it was in a downtrend. It did not. It got taken out, which created this zone. So my expectation is that price is going to have to consolidate here in between these two zones because now it's in a range. And if that happens, then it's just going to confirm what I've come to learn about switch zones. So we'll wait and see, but I believe that taking out a switch zone breaks a trend. I do believe that. Okay, so let's get back to oil, but keep that on the top of your mind when you're looking at charts and switch zones.
Yeah, that's important.
Okay. Yeah, it is important, and it's one of those things that you don't think about until you get to that level where you know a lot about switch zones, and now it's more about, the more you come to understand market dynamics, the more you'll understand what is to be expected when you've laid out your analysis that says this is what's going to happen. If the market dynamics is not what you would expect, then that means something about your analysis is off. Something about it is off, because there's always, 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 always an explanation. No matter what anybody tells you, there's always an explanation.
Mm.
Okay, and you've come to see this through level 1 through level 2. How many things have made complete and utter sense?
Yeah.
And the reason why is because there's always an explanation. Have you guys not seen that?
Mm-hmm.
Yeah. So there's always an explanation. So if the market dynamics is not playing out the way that you would expect, that means there's something that you're not seeing. And if there's something that you're not seeing, guess what? You can either say, well, I just don't see it. I don't know. It's a mystery. You could say that, or you could take note of it, like I did with the one example of emotional candles. I would see an emotional candle travel through a zone, and I would initially mark that zone as being taken out, and then later on I'd see price come up to that exact area, respect it, and then trade down and respond from it. And I'd say to myself, well, that didn't make sense. So if I was to just quickly say, well, that's just one of those mysteries and write it off and move forward, I would have never learned. What I did was I took that experience, I journaled it, and I said, this is what happened. This is telling me something different is going on here. And then the next time it happened, I would write it down. This is what happened. Something different is going on here. And then after you write it down 10 times, I mean, you don't even have to do it 100 times. After you do it 10 times, you're like, no, this zone should not be taken out when it spiked through. And so when you adjust your analysis based on that, all of a sudden the analysis starts making sense. Now, when there's this big spike through, you travel the zone right through that, and you'll see that the reaction that price gets from those zones down the road is proper. So if a situation doesn't play out like you would expect it to, based on what you know to be true about how markets move, then the markets are telling you your analysis is incorrect. And there's something that you don't know. And that is what fuels me every single day. Because when you start to gain momentum on discovering something, you don't ever want to stop. I mean, I don't ever want to stop. When you start to discover things, you're like, oh my God, this is crazy. I got to learn more. And the more you know, the more you can apply what you know to the charts so that you have an even better understanding than you had previously. So it's like the momentum just keeps on building. That's why I say that 10 years from now, can you even imagine where you're going to be if you continue your studies? Because you just keep on building layer upon layer upon layer upon layer to the point where your knowledge of the markets is beyond anybody. You know, like I read this book from Jim Simons, the man who figured out the market. Well, he didn't figure out anything. He had algorithms that are using probabilities to gain profits. But if you ask him about, if you sit him in front of a chart and show him multiple time frames and say, where's price going to go from here? I bet you I'd be more accurate in my analysis than he would be. Can he make money using his algorithms? Yes. But does he understand how the markets move from zone to zone? Heck no.
No.
Because he's not studying that. But he knows more about algorithms than I will ever know, you know? So, okay. So that is the process. That is my process. This process is what has brought me to where I am today. And this process is what is the process that is taught in private schools. How to learn, how to take what you know to be true and apply it to your reality to come up with a better understanding of what's taking place. This is not anything new, this process. This process has been taught in private schools for hundreds and thousands of years, you know, in these secret circles where they taught you about life. This is the process. So I just, unknowingly to me at the beginning, when I first started doing this, I didn't realize that I was using this process, but I've since come to discover that when I started learning about the trivium and the techniques that have been taught for generations on how to learn, and I started to realize, oh my gosh, I was actually applying those principles to the charts. And it makes sense why I discovered all these things about the markets is because I was using that process. All right, I'm going off on a tangent. Let me get back into gear here.
Kev, I was looking at this.
But one last point, I just want to say the reason why I keep repeating this over and over again is because you're going to get to a point where you're going to know a lot about the markets, and you're already doing that now with certain things, with certain zones. Like you guys were talking about this trend line over here. Jason mentioned that he doesn't believe that this wick over here was emotional. So there's a lot of things that you already know because you've seen it so many times, and it's when you apply these things to your chart work, it'll start telling you whether other aspects of your chart work are correct or not. Yeah, Jay?
I was looking at this donut that's with Sonia, Kev.
Yeah.
This one.
Yeah, what about it?
That's with Sun.
Yeah, it is. I have it drawn as a switch zone.
No, I mean, carrying it straight across. You went to here.
Oh, straight through.
Yeah.
Yeah, that's possible. Let me see. So then it would be
This one.
down here, and then holding, and then up here, and then the same zone. That's possible. That's possible.
Well,
Let me
actually,
see.
I had no. I had the demand here. Well, the demand would be not wouldn't be here, Kev.
Well, because of the stair stepping, you'd have to go all the way down to the bottom. But let me see. 1, 2, that candle. Yeah, that's true. Yeah, because this is this green candle here is a momentum candle to the upside, but it didn't
Yeah.
close above that. Let me see here. Moved up, no consolidation away. I think, yeah, no consolidation away from supply, bring it back down. Yeah.
So yeah.
I think it's more likely something like this down here. Like that. Especially because a lot of times what you'll see is price reacting to that demand before it even eventually takes out that area.
Yeah.
So that could be it. And that would still validate this here. Up here. Instead of down here because of that wick. I don't know, tough to say. We could argue that, to do that and to not do that, it's tough to say. I think it's more likely that there's probably areas of demand here on the lower time frame, and then all these reactions are from lower time frame. I think it's safer to say that. But it's possible. Big drive down, comes back up. Yeah, there was a zone here. There was a zone here on the weekly because of this move down here and the consolidation. So there was a zone here. So there's probably a zone here on the weekly and then that there.
Okay.
Yeah. Trend line. Supply. See? You see?
Yes.
That's what's going on there. Okay, let's go back to monthly. Okay, so let's just get rid of that. Yeah, so let's stick with the most obvious, because when you start to go into tougher areas here, this type of stair-stepping action all the way up, taking it out, this is not typically what we see. So when it starts doing that, I'd rather not stretch the imagination and try to make that work.
Yeah.
You know what I'm saying? If
So
it's
can,
clear, great. If it's not, probably best to stay away from it.
so the fact that this candle here, right, the green candle, didn't
Mhm.
close above this wick, you would also consider it as part of the stair-step in action. Because I know you mentioned, you mentioned that it didn't close above, so I was wondering why. Because I didn't look at that
It
aspect
could
of
be.
the.
It could be. I don't know. I haven't gathered enough information about that, but
Oh,
that's very possible the case.
okay, okay.
Very possible. So that's another level. See, now you're asking the right questions. Now you're asking the right questions. So we should journal that. Does this have to close above? Because we know that if we have stair-stepping candles, they're typically what, 50% candles, right?
Yeah.
What sets apart one stair-stepping action from another stair-stepping action would be a long candle.
Mm-hmm.
How do we know it's a long candle? Because the momentum candle closes above the wicks of the stair-steppers.
Yeah.
Okay, but what if the stair-stepper wicks, the long candle closes within that? Then what does that dynamic tell us? So that's another area of study, another thing to journal, another thing to look at, and let the markets teach you. What the market is teaching me here is that if that momentum candle doesn't close above the wicks of the stair-stepping candles, then it's considered to be, we can't separate that one area from the other area. That's what that's telling me. And one of the things that we could do to validate whether that's true or not is to look at, like we did, the weekly chart to make sense of this price action. Because we'd have to say to ourselves, okay, if this momentum candle was enough because it was a long candle to separate this area from this area down here, then what would that mean? Then you'd have to take what you know to be true about wicks after a big drop, what you know to be true about, the size of these wicks when it comes down after a big drop and how it reacts from demand. Should that be included in the demand zone or not based on that? And if not, then maybe the zone should be drawn up here based on what you know to be true. And if that's true, then this area should be supply. What else do you know to be true about supply zones? Do they typically look like this area up here? Is the size of the zone too big? Is it too small? Is the reaction, the candles reacting from it, does it make sense? When it was removed, is it removed the way it typically is removed? So you see where I'm getting at?
Yeah.
All those things that you know to be true, you use that in your investigative process to figure out what the market's trying to tell you. So based on my knowledge, I'd say that that momentum candle has to close above the wicks of the stair steppers. Why? Just because of what we know to be true about trend lines and stair steppers.
Yeah.
If you apply the logic of what we've learned from trend lines and stair steppers, when we have a rally, a base, a drop, a base, and they're all stair steppers, and then a momentous move to the upside, do we not say those are all stair steppers that are passing through the top here, which means this is all basing, which means this is not a trend line?
Correct, yeah.
Have we not discovered that?
Yes.
And the logic is why? Because you need that momentum candle to cross over the wicks of the stair steppers, right?
Mm-hmm. Before the
So if the
highs are broken.
yeah. So if the market has taught us that, then we can apply that same logic to here.
Yeah, that makes sense.
Automatically.
Mm-hmm.
But don't take it for granted, because we've also come to realize, just like with these switch zones, okay, maybe in some circumstances taking out switch zones break a trend, and maybe in other circumstances taking out switch zones don't break the trend. We have to discover that. Just like I'm looking at the Aussie US dollar and looking at the weekly chart, I want to see how it plays out on the daily chart, because that's going to confirm whether or not that downtrend was broken by that switch zone being removed or not.
Mm-hmm.
I believe it is broken. So I'm watching price action on the daily chart to see if it's going to play out like I would expect. So this is what I mean about taking what you know to be true, applying it, because the market taught you that. And if we discovered that this supply zone had to be here on this monthly chart, and we looked at the weekly chart and it made completely no sense, and in fact, you know how sometimes price comes down, okay, in these level 2 classes? Tell me, guys, how many times have I said price is coming down, and the way that the candles are forming, I could tell you that what's happening is it's responding to a demand zone from a higher time frame. How many times have I said that?
Yeah, that's true.
You guys remember that? How many times
Mhm.
I said it? Okay.
Yeah.
Yes.
So if I looked at the weekly chart and I saw that as price was going up, it had the same formation, what would that, if I saw on the weekly chart that it had the same formation where it was coming up and reacting like I normally see it react when it's reacting from higher time frame areas of supply, what would that automatically lead me to suspect about this area right here? What would that automatically lead me to suspect? That there had to be monthly supply here, right?
Mm-hmm.
Are you guys following me, or am I throwing you guys way off?
No.
So you're saying that there is monthly supply. Is that what you're saying? Or you
Yeah,
just
if I looked at the weekly chart and I looked at this price action within this blue circle on the weekly chart, and I saw it reminiscent of a way that price forms when it's responding to a higher time frame area supply, that would support the argument that there had to be supply here on the higher time frame.
okay?
Yeah, it's a
Okay.
bit like you've always said that if it drops from an area and you haven't got a supply on that actual time frame, it doesn't mean you're trying to fit one in there somewhere.
Exactly.
It's like it, you know
Yeah.
what I mean? It's else is happening.
So that would lend to the argument that there has to be likely supply here.
Yeah.
So then I would have to switch back to the monthly chart to see what other aspects of what's taking place here support the fact that there is a supply here. And if there was a lot to support that there's supply, then I have to figure out why it's supply based on this price action here. Why the logic that I have learned from using the stair steppers and validating trend lines, why I cannot apply that same logic to here. Then that's my job, is to figure out why.
Yeah.
So when you're building up a knowledge base, when you have a problem, when you're figuring out a problem, anything in life, when you're making a decision about anything in life, you have to choose things that would support making that decision and things that would go against making that decision. When you're a kid, you don't have a lot of knowledge. You don't have a lot of experiences to tell you if it's a good idea to stand on top of a ladder or not. So when you're going through your decision-making process, you're thinking, should I climb that ladder? Yes. Would it be fun? Yes. Do I want to see the room from a higher perspective? Yes. Can I do it? Yes. Okay, so then you do it. You're not even thinking of any no's, right? But then what happens? Then you fall, okay? Then you fall, and guess what? Now you have a different perspective, because now you have knowledge. Now you have something to base your decisions on. So now after that fall, you hurt yourself, and it hurt pretty bad. And you remember it because it hurt. You felt pain associated with it. So next time you're looking at that ladder, you're like, should I climb that ladder? Yes, I'd like to. Is it dangerous? Yes, it is. I can hurt myself. But did I learn something from that experience? Yes. What is it? That I have to hold on with both hands. So that's another plus, because I learned something. So now I have an advantage to not fall. So, so now you have more knowledge to base your decisions on. So discovering the truth of what's taking place in the markets is the same thing. When you're brand new to the market, you don't know much. You know, you come to the school, you learn the lessons. The lessons are not perfect, but they're to help guide you not make a lot of big mistakes. And they keep you on track to making a lot of good analysis. But as you can see, every market scenario is different. There's always these little aspects of what's taking place on the chart that is different than, you know, exactly how the rules are laid out. And it's in these small scenarios that we have to use our knowledge base, apply what we know to be true to discover. So if you're looking at that situation that we're looking at, right away, do we know something about the stair stepper formation? Yes, we do. So that works on our side to discover that there is no monthly supply zone there because that momentum candle has to close to the upside. So do we know that a momentum candle has to close above basing candles for it to be a move out of that area? Yes, we do. Okay. So you look at the weekly chart. Does it support that it's responding from a monthly supply area? Yes, it does. So that works against what we are trying to figure out, whether or not there's supply or not. On this side, monthly supply does not exist. And on this side, monthly supply does exist. So you take what you know to be true and you start piling it up. And if it looks like this at the end of your work, guess what? Monthly supply is not there. But
Makes sense. Yeah.
if you're doing your analysis and you're applying what you know to be true, and it looks like this, you have arguments that say yes, it is, and you have other aspects of what you know to be true that says it isn't. Then you've got a problem. That means there's something that you don't know about that scenario. So now it's your job, and you don't have to take on the job. I'm just saying this is what I've done to get to this point. I've only been trading strong trading. I started in 2013, but like seriously applying hard lessons, real intensive studies, the last 5 years. Look at what we've discovered in the last 5 years. Look at how much I've discovered about the markets in the last 5 years. How did I do that? By going through this process, taking what I knew to be true, and at the beginning I didn't know a lot. So how did I build upon that? Hours and hours and hours. What was it that I said? Over 30,000 hours? But like this process, not 30,000 hours of, you know, playing games, you know, intentional practice. Any professional athlete will tell you, if you want to learn how to play tennis, you can't just ask your friends to come out into the tennis court and hit balls back and forth. You're not going to learn how to play tennis properly. You have to have specific drills. You got to be focused, and you have to have something that you're looking to achieve by the end of your session. You sit down, what do I want to achieve? I want to achieve this. Then you work for an hour achieving that. If you're just drawing zones and trend lines and making things look pretty, you're not going to get anywhere. Your 30,000 hours is going to be a big waste of time. But if you're focused and you're trying to achieve something, your 30,000 hours goes a long way because it's exponential. It's like making 10% on an investment every single month. You can start with $100. By the end of the year, you've got a fortune because it's 10% on 10% on 10% of your capital. So it's exponential. And applying this process to learning how to discover the market, it's the same thing. 5 years, and look how far I came. You know, I would arguably say I know more about how the market moves than the vast majority of professional institutions and traders and people that are not using algorithms to control the markets. Would you guys agree or disagree with that?
Yes, I agree 100%.
And I've only been doing this for 5 years. So you see the power. So do you see
Yeah.
how excited I get when I think about where I'm going to be 10 years from now? Like, I'm just so excited. You have no idea, because I'm constantly doing this process, and I do it with you guys live on these classroom sessions so you can see the process of discovering something, because I want my analysis to be dead on accurate. And if it's not, then that means there's something going on and I got to figure it out. That's what drives me.
Yeah, that makes sense.
Okay. Yeah. So yeah.